All right, we're going to answer an age-old question with Bitcoin. Why 21 million? There's only 21 million. There will ever be 21 million. So why that number? We're going to take a look. We're going to try and decode this because Satoshi Nakamoto didn't share the reason behind that number, but there likely is significance. Okay? So what we're going to do is we're going to start by taking a look at there's actually mathematics behind it, which was the driver behind 21 million. Now, there's always going to be an arbitrary number that has to be chosen along the way. So we're going to try to identify what that arbitrary number is and then work backwards, right? Ultimately, with Bitcoin, what Satoshi Nakamoto was solving for was inflationary money, right? He saw this as a major concern and really looked at gold as really one of close to being a solution, but he knew that it was not, right? There is not a finite supply. It's not the most divisible. It is not the most portable. There's a lot of things with gold. So there had to be a better solution, right? And so ultimately there was a message that was input into the Genesis block, the first ever Bitcoin that was mined. And in that it said, is a reference to the Genesis block message, the Times, January 3rd, 2009, Chancellor on brink of second bailout for banks. This is truly what Satoshi Nakamoto was solving for. Just this printing of money, these bailouts, a system that was broken and needed to be fixed, right? So really, this is just a way to protect against the inflation, and scarcity is the superpower of Bitcoin itself. So let's take a look at this, because that reasoning is what led to the mathematics behind Bitcoin. So let's talk a little bit about it. So ultimately, the fundamentals is each 210,000 blocks, which is about every 4 years, the amount of Bitcoin that enters the market is cut in half. So this creates a controlled scarcity over time. All right. Now, the frequency that those blocks come out is every 10 minutes. And we're going to talk about why it was 10 minutes versus 1 minute or 30 minutes, right? Ultimately, what happens is we arrive at a finite supply of Bitcoin in about the year, I think, 2140. That's not the point. The point here is let's try to put ourselves in Satoshi Nakamoto's shoes and then determine what the number one driving factor was behind 21 million, because it really could have been any number, right? So we're going to take a look at a few things. But let's first by taking a look at the purpose of having a money supply that decreases over time, okay? So what we're going to do here is we're going to take a look at the halving schedule. So what you can see is in 2009, the block reward was 50 Bitcoin every 10 minutes, okay? And really what's most interesting about that block reward is in the 10-minute significance is that Satoshi Nakamoto knew that in order to mine Bitcoin over a period of time, technology will always continue to enhance and enhance and enhance. And what he didn't want to have happen by using proof of work is that as technology advances, it messes up this schedule. This is the schedule that Bitcoin was completely built around. If you have technology that outpaces the mining difficulty, this falls completely out. So what he actually focused on first was saying, how do I control for the issuance knowing technology will improve over time? Instead of putting a hard cap on it, he just said, let's just make the difficulty not static, but fluid. So what we'll do is we're not going to look forward and assume what the difficulty should be. We're going to look backwards and see what happened in the last 10 minutes and then adjust that difficulty. So when people solve for these challenging problems, it only happens about every 10 minutes. That's genius, okay? Absolute genius. Now forward looking, backwards looking. Okay, and then the system adjusts. So the whole goal is that every 10 minutes, and again, okay, so the 10-minute part is that if you were to do it for 1 minute, okay, and you have to have consensus by all these nodes, it could just, there might not be enough consensus in enough time to actually call out who had which reward miner got that reward, and then it creates all these chains, and it's just a mess of a blockchain. So you have to have enough time for there to be consensus. Now, if you wait too long, what can happen is that you could have somebody with a tremendous amount of hashing power start to take over those rewards, and then it doesn't become fair and equitable. So you got to find the happy middle ground, and that's where Satoshi Nakamoto came up with 10 minutes as enough time for there to be consensus, but not too much time that somebody with a tremendous amount of hash power can just kind of overrun and get a unprecedented or unfair amount of block rewards, right? So that's the background there. But what we're taking a look at is, so the 10 minutes actually came down to a technical reason, okay? That was a technical reason. This is the schedule itself. And as you can see, within the first year, 50% of all the Bitcoin that would ever exist, the 10.5 million, was produced, was mined. Okay? Now, then it gets cut in half. And then it's every 10 minutes, there's 25 big block reward every 10 minutes. 12 and a half. So you can see it continues to go down and down and down and down and down. Now, here's the interesting part. The inflation was high in the beginning. Absolutely. Okay? And historically, what is the US dollar? What do we try to keep it around? 2 to 3%. Now, I believe it's been closer to 8 or 9% based on the money printing that's been going on. But let's just call it, if they want to call it 3%, let's call it 3%. Well, guess what? In the first halving cycle, it was a tremendous amount more. Second halving, tremendous amount more. You get down to this number 2. All right, we're now at about 4, okay? Once we get to 2020, it is now below, the inflation rate is now below, for sure, what the US dollar is. And then if you go to gold, gold historically has operated around a 2% inflation rate, right? And so what that means is actually, I believe it's gone anywhere from about a 1.3 to a 1.9 or 2% in that range. Let's just call it 1.3%. When we get to 2024, there is no question. There is no question that the issuance rate of Bitcoin is the most finite between the US dollar, fiat currency in general, and gold. It is more lower issuance rate than gold, the stock to flow ratio. And as you continue to go down this path, it nears 0. Okay? That is the power of Bitcoin. And that's why you're seeing these strong price jumps as well, because it's getting rarer and rarer and harder to get. And the more people that hodl and hold the Bitcoin, there's less circulating. That's going to drive up the prices. Now, we want to get back to the reason that it's 21 million. Why is it not 42 million? Why is it not 20 million? Okay? There are arbitrary numbers in here. There absolutely are. Okay, and we're gonna take a look at one of those, what those numbers are, and we're gonna try and put ourselves in the shoes of Satoshi Nakamoto and arrive backwards at why it's 21 million. Okay, so here is the math, right? These are the variables in which we are working. Okay, we already discussed the 10 minutes. Okay, the 10 minutes being or the average time between blocks. Now, this was, I believe, more of a technical thing, and I don't think that's where Satoshi started. I don't think he said, I want to do 10 minutes per block. This is, and we're going to work backwards. No. My belief is that the issuance rate and the halving was actually the starting point, and then everything else was built around it. So hear me out. What we'll do is we'll look at the convergence on the number 2. So I'm going to pull up a calculator here, and what we're going to take a look at here is if we start with 1, right? And then we say, okay, now we're going to cut the issuance rate in half. So now we're at 0.5, okay? Now we're going to cut the issuance rate in half again. Then we're going to do it in half again. And then we're going to do it in half again, all right? And this continues on and on and on and on. Sorry, we have to start at 0.5, sorry. And this continues on and on and on again. Why is it not adding up? Plus 0.5. 1, 2, 4. 5 plus 0.06, whatever. There you go. Can't even do math, but you get it. If you did that string out long enough, you get to 2, okay? That's what it all adds up to, okay, that issuance rate. So knowing that, what we then can say is we have 10 minutes, forget about the 10 minutes per block for right now, right? Ultimately, that's the issuance rate that we have to play into, right? That halving is the most important thing. And so the question then becomes, tell me more about these details. So you can actually look at these other variables, right? And what's so fascinating is that if you take 50 Bitcoin as a starting point, you multiply that by, it all comes out to about 2. That it gets you to 100, okay? Now, whatever the halving cycle is at 210,000, okay? Every block it gets halved times 100 equals 21 million, okay? That's the cycle that we're working within, okay? And you can work backwards from any number. So if Satoshi Nakamoto said it's 20 million, okay? And then we divide it by the 100. Now we're at every 200,000 blocks, we get there. Now the interesting part is that, and I think this is only coincidental, but the 210,000 blocks comes about every 4 years based on the 10-minute intervals, which aligns closely to the political office, right? So every 4 years there's a new president, or I should say an election. I think that's only coincidental. So then what we look at here is we say, why 21 million? Okay, why not that 20 million? Why not 42 million? Wanted to create scarcity and had made reference to it, was kind of an educated guess. But what I believe is that this is arbitrary, right? In that the M1, right, the money supply at the time, we have to go back to 2009, was about $21 trillion, okay? So what he did is he took the M1 money supply at the time and said, we're just going to cap it here going forward. Now, the 21 trillion divided by 1 million gets you to 21 million, okay? And so ultimately what he's saying is when Bitcoin equals a million, right, then we're at 21 trillion. So let's do this real quick. 100,000 million times 1 million, 100,000 million, billion, trillion, right there, okay? So that was a way to work backwards because it still needed to be a finite supply, right? And then we get down to divisibility, and at that point in time, there's 100 million Bitcoin, or I'm sorry, 100 million Satoshi per Bitcoin. So this is highly, highly divisible, right? 21 quadrillion or whatever the number is. It's some crazy big number, okay? So we backed into, ultimately, this is just a rough guess. He never came out and said it, but at the time, there's about 21 trillion market cap for, or I should say, the money supply in 2009. Let's use that number. And maybe in 2008, it was close to that 21 million, right, when the white paper came out. Bitcoin launched in January 2009. So there you go. And then we kind of backed into it. So let's just say that's where the supply started off. At the end of the day, all of this is built around that halving schedule, okay? So 21 million could theoretically have been chosen because that was the M1 money supply in 2009. But the rest of this is mathematics, okay? So you have the halving schedule. That's what's driving this entire equation. Then you have the 10 minutes blocks. That was chosen for technical reasons, okay? And then you have to just choose arbitrary numbers at the 50. That's just a round even number to work with, right? And the 210,000 blocks is a result of the 21 million divided by the total number of halvings until the BTC runs out, right? So, not runs out, but becomes truly finite. That's likely the thought process that it came to. Again, there has to be a line drawn somewhere. There has to be an arbitrary number chosen. This seems to check out and make sense. And here's a look at it closely, right? The total this is from Satoshi himself. The total circulation will be 21 million coins. It will be distributed network of nodes when they make blocks with the amount cut in half every 4 years. Now, the 4 years, I don't believe was intended. It was an outcome of the math equation, right? The average time to generate a block is 10 minutes. I believe that was chosen more for technical reasons than anything else. And then the proof of work automatically adjusted by the network is absolutely genius because it's looking back in time, not forward in time. You can always adjust for a known, right? Look back at data versus make an educated guess looking forward, which we don't know the answer. This ties the 10-minute block reward at 50. That math is what need to be backed into to arrive back at that 21 million, right? The fact that new coins are produced means the money supply increased by a planned amount. That was paramount to this entire thing, but it does not necessarily result in inflation. This is what's so fascinating, okay? If the supply of money increases at the same rate that the number of people using it increases, price remains stable. Everybody's asking about why isn't Bitcoin stable? It's because you're early. Because you are early, it is volatile, and that volatility, when partnered with patience, you will be rewarded. But you have to have patience, and you have to be able to stomach the volatility. But if you understand what the long vision is, it's a beautiful, beautiful thing. Because what he says here, if it does not increase as fast as demand, there will be deflation, and early holders of money will see its value increase. Be early. You still are early. Okay? The total number of coins generated is ultimately limited by the design of the system. So this was Satoshi Nakamoto in November 6, 2008 saying, I don't know what the number is going to be, but it will be finite. And it will be defined by the system. It will be defined by the mathematical equation. With Bitcoin, you are placing a bet on mathematics. When you put money into the stock market, you're placing a bet on a lot of variables, and a lot of those are human variables. Right? You can have a change in sentiment of the people in the marketplace. You can have a CEO that goes and does some horrific things and drives the company into the ground. With Bitcoin, you are literally placing a bet on math that math works, and guess what? Math usually maths. I mean, it's an unbelievable bet. Why am I saying the word bet? It's an unbelievable, educated, risk-reward weighted decision. That was just mumbo jumbo right there. But you get what I'm saying. Like, you literally are just saying, do I believe that this protocol will work? Do I believe that we will continue to print money and devalue and inflate the US dollar in any fiat system? Yeah, there you go. The math should maths. I love that saying. All right, and then we get back to that money supply. So here's the whole thing, is 21 million is the sacred number within Bitcoin itself because Satoshi Nakamoto chose that. There's a high likelihood that it was a random number chosen out of thin air. I don't believe that's the way that Satoshi Nakamoto did this because everything was built by design. The 21 million was likely saying, hey, you know what? I don't want to do an issuance of 21 trillion of these coins. That's too many. Let's get this back down to a number that's more reasonable, 21 million. And then we take the halving cycle, we back that into 100 cycles of that, and then we get to the 50 Bitcoin rewards in the 10-minute interval due to the technical reasons of consensus, time for consensus. So there we go. That's a long way of saying 21 million is probably, if there's one question I've started to play around with, is if you want to know if somebody, their level of understanding of Bitcoin, because everybody's just about heard of it, right? I think there's only one question to ask to know where to take the rest of the discussion. And I think the answer is, you simply ask, how many Bitcoin are there? And if they don't know the answer, That tells you something. That means they have an education on Bitcoin simply through media, have not done any level of research. And anyone who can quickly tell you it's 21 million doesn't tell you exactly how much they know, but at least they know one of the most fundamental things, because if I were to distill this in my opinion, it's literally not the 21 million, but it is the hard cap on the money supply. This digital scarcity that everything else is built around on Bitcoin, and the rest of the math equations and the proof of work is all built for that singular purpose. The issuance rate is absolutely beautiful. Right here, you can see this over time, how clear. So this is the stepwise ladder that we do. And if you look back, this is actually real time of what happened based on those adjustment levels. And look at this. Now, life isn't perfect, but man, is that a beautiful stepwise step ladder that we're on right now, nearing zero. And if we circle this all the way back to the US dollar, guess what? Your purchasing power, we all know this, has gone down, 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 down ever since back in 1910 when the Federal Reserve came in. Look at, there's a singular trend of that. And you know what? Let's go take a look at one other singular trend. We're going to go to beautiful old Bitcoin. And guess what? If you zoom out far enough, what is the trend? Up, up, up. What is the trend? Down, down, down. Over a long enough time period, fiat money has proven to only go down in buying power. And over a long enough time period, there will be a tremendous amount of volatility. But guess what? Bitcoin has proven to go up, 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 up and to the right versus what we got going on there. So, in recap, 21 million Bitcoin is a sacred number. It's beautiful. Likely could have been attributed to the current money supply at the time. There had to be something arbitrary, but at the end of the day, this is all built around a finite supply with a known and controlled halving schedule, or I should say ultimately an issuance schedule. We're already well below any other thing you could possibly own, with the lowest inflation rate out there, only going lower, nearing zero. And guess what? Right now in 2025, we have 20. There you go. We have almost all of the Bitcoin already mined. So when you hodl hard. You take that money off the market, and all that does is that increases the price of Bitcoin over time. So with that, thank you. Like and subscribe below. This was more of an educational one. Let's look at the charts and let me know your thoughts, and we'll go from there. Keep stacking those sats.